The one bright spot in Tesla's auto business in 2024 was actually China. The company sales declined in the US and in Europe, but China was actually a very strong market for Tesla in 2024. The problem is that's changed in 2025. The company is facing more competition, and we just got word the company's sales are down almost 50% in February as competitors are growing. So the company looks like it's losing market share. There's a lot of dynamics going on here. There are some upgrades that Tesla is making to its Model Y in particular, but there's also the dynamic that Tesla's vehicles are becoming less competitive and the brand itself is not what it once was. I think that's something we really need to consider when you look at not only Tesla's sales volume, but also what the stock is trading for. So I'm going to dig through some of the latest news today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first look at what is going on in China. And this is from Reuters. It says that the company's electric vehicle sales dropped 49.2% in February to 31,000 vehicles. That's the lowest since August 2022. Now, the Model 3 and Model Y from China is not only sold in China, some of those are also exported to Europe. So we've seen decline in sales in Europe. That's going to hurt their China production. That's actually what's included here. According to the Chinese Passenger Car Association, they sold 93,926 Chinese-made vehicles worldwide in the first 2 months of the year. That was down 28.7%, so a really big number. And what's notable about this is that competitors are not going through the same pain. Yes, you had those upgrades. There was the Chinese New Year, which moves around on the calendar. But rival BYD, it says, recorded a 90% increase in passenger vehicle sales last month to 614,679. Now, this drop in China is on top of the decline in sales in Europe. This is from Electric, and these numbers are starting to trickle in right now for February. But you can see that in these countries that are listed, Germany, UK, France, Netherlands, Norway, Spain, Sweden, Denmark, and Portugal, sales were down 46.2% in January. February looks like it's not going to be quite the same decline, but decline of between a third and half on the early reports coming from France, Norway, Sweden, and Denmark. So the turnaround in Tesla's business, at least the electric vehicle side of the business, has been really stark. And this actually continues a trend that we saw starting in 2023, where the company's demand really wasn't what I think a lot of investors thought it was going to be. Remember, going back to 2021, 2022, Elon Musk talked about increasing their production 50% per year. They've essentially been flat for a couple of years now, and they're not expanding their production in the way that we once thought they were going to. Put off the Mexico edition, and now it looks like their sales are going to be in decline in 2025. At least that's the early indication. So Q1 could be really bad. And this compounds some pretty negative trends that we've seen in Tesla over the past couple of years. Just look here at the company's automotive sales, regulatory credit, and auto leasing revenue trends. You can see that these are all trailing 12-month numbers, but they peaked at the end of 2023 at $82.4 billion. That is now down to $77.1 billion. That's in 2024. Now, the number to notice here is in blue, the $2.763 billion worth of those auto regulatory credits. Those are sold in the US and Europe primarily, and they're sold based on how many vehicles Tesla is producing. So if their production goes down and competing production goes up, it means that they're going to get a smaller percentage of that pie as competitors who are making ICE vehicles have to buy some of those regulatory credits. If you just look at those production trends here, you can see that production is declining about 1.85 million units is what it peaked at the end of 2023. That's now down to 1.77 million units. And it could be that production declines even more in 2025. Remember, this is as a lot of their competitors who are buying some of those credits. So companies like Volkswagen and Ford, they're buying those credits, but they're producing more and more electric vehicles each year at this point. So those vehicle credits are going to be declining in value for Tesla. And those credits, which you can see here in blue, are a pretty significant portion of the company's net income and free cash flow. So if that money starts to go negative or starts to dry up, that could be a real negative for the company's financials. Let's also look at some of their margin trends. Now, this is the gross margin and operating margin for the entire business. So this includes all of their other segments, in particular the energy business. That's actually been a pretty solid margin business because of subsidies in the US over the past year or two. But you can see that the trend is clear with their margins. Gross margin peaked at 29.1%, now down to 16.9% in the most recent quarter. And this is the problem with the manufacturing business. When you have a manufacturing plant and you have, let's say, 2 million units of production capacity like Tesla does, you need to produce nearly 2 million vehicles per year, or you have costs that are just sunk costs going into that plant existing and having to function their normal operations. So you need to continue production. You need to sell more discrete vehicles. If production is declining, you've only got a couple of choices. You can accept that decline in production and keep your prices where they are. That means you're probably going to lose money, or you can lower your prices. This is what Tesla did during 2023 and 2024. They actually raised their prices during the pandemic. That was the big reason that their margins went up. But their margins have been going down over the past couple of years because they've had to reduce their prices to compete with other companies, not only in China, but also in Europe and the US. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. That reduction in prices did not lead to an increase in demand. So they're really stuck in a tough position now. If demand for their vehicles in the US, Europe, and China, their biggest three markets, are in decline, and it looks like all three are declining right now, what are they going to do? Are they going to lower prices even more, give up even more margin just to try to move vehicles through the system? Or are they going to accept lower profitability because there's less volume being produced? Both bad scenarios for Tesla, and this is really the challenge being an automaker. Tesla, at the end of the day, this debate has been going on for a very long time, but this is not a technology company. This is an automaker. Their costs go into making vehicles, and that means that they live by the laws of supply and demand, just like every other automaker. We've been hearing for years that Tesla is going to have better margins than their competitors, that they're really a technology company, that they're somehow more efficient or a better manufacturer. None of that is borne out with the numbers. And we're seeing right now the downside of that. I think if these trends continue, it looks like the first quarter and potentially all of 2025 is going to be really bad for the company. And there's a bunch of worries that investors are going to have to think about. There's the macro pressure. Is it possible that the US goes into a recession? Could that recession have already started and last throughout 2025? It's very possible that that's going to be the case, especially as things like tariffs are put on. You have drops in demand in Europe and China. There's competitive pressures, but there's also the brand deterioration that we've seen just over the last 6 months or a year because of some of the actions of Elon Musk. That has not gone over well in certain parts of the world. Wouldn't be surprising to see that demand continue to drop, particularly in Europe and China. And at the end of the day, Tesla's financials were not great towards the end of 2024. So if they get worse from here, what's going to happen to the stock if we see net losses or even negative free cash flow for Tesla? That's ultimately why I ended up buying long dated puts in January, because I thought that stock was overpriced. I thought it was a great hedge for a market that could potentially come down. And it's turned out that the stock has really turned south a lot faster than I thought it would, because some of these things are already starting to play out. Now, the next domino to potentially fall is some of the subsidies that Tesla has been relying on, particularly in the US. That $7,500 tax credit has been on the chopping block. Also, all of the subsidies that go into their production, the IRA credits, there are billions of dollars that are going to Tesla. That is the reason that their energy business has been growing and profitable, because that they had that energy capacity in the US, and so they benefited from those production tax credits, but that also could go away in 2025 or 2026. So I think a lot of pressure for Tesla, and the fact that sales are declining in China is actually the worst news, because that was the one bright spot in the company's operations in 2024. But let me know what you think about the future of Tesla. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.